Hello everybody, welcome to the technical analysis webinar with AvaTrade. My name is Troy. I'll be presenting this evening. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me okay and seeing my screen all right. Just waiting on a few more responses to make sure everybody's up and running all right. If you would, type OK in the chat box if everything's up and running okay for you. All right, great. I've got enough responses. Looks like everyone's up and running fine. If anyone has any issues as we go along, please let me know. As we get going, as always, some things to keep in mind. Obviously, no one trade is guaranteed to profit. So there is risk with each and every trade. And so in some manner, you want to make sure that you're managing your risk in a way that makes sense for your account and for your risk tolerance. Usually traders are using some combination of stop loss settings, maybe hedge positions set up in the opposite direction of your primary move that can be used to cover in case the market reverses on you. Those are stop pending orders like buy stop and sell stop. Can trigger if moves go against you to kind of hedge things up. There's also a unique tool that AvaTrade offers for risk management called AvaProtect, which is available on our award-winning mobile app AvaTrade Go and also available on our WebTrader platform. AvaProtect allows you for a small premium cost to protect for defined time periods by the hour, by the day, against any and all losses for those covered time periods. So it's a unique way to manage risk. It can be part of your risk management plan, and we'll take a quick look at that as we get going. Some other things to keep in mind: what we cover is meant to be educational in nature and shouldn't be taken as financial advisement. Now, real quick, what is technical analysis? It's pretty simple. Basically, it's looking at a chart that shows the price changes over time. Usually it's a candlestick chart that traders are using. And so the technical analysis part is looking at the patterns that you see on the historical movements and trying to decide if there are important price levels, important trends that you can identify that may help you predict future movements based on the past movements. And while the past is no guarantee to be a predictor of the future, many times it is very helpful in terms of identifying price levels where you might get a bounce in a dropping market or a pullback in a rising market, or where you can identify where there's a large amount of momentum if a movement breaks through a certain price level. You can also identify trends, which is when a market is moving gradually up during a day or gradually down. You can identify ranging movements. That's where the market is like a snake, up and down, up and down, up and down within a certain range. And that's usually on a day not like today, by the way. The volatility has been through the roof today, so certainly we have not had ranging markets. We've had a strong downtrend in many of the markets today, or uptrend, depending on which instrument pairing you're looking at. But there's been a lot of fear that hit the markets today. We'll take a look at why, and then we'll get into the technical analysis of things. In general, we tend to use manual methods of technical analysis, meaning we'll draw our own lines, find our own price levels. And the reason for that is it forces you to learn why those lines are being drawn, rather than having an indicator do it for you, which is the other way to take advantage of technical analysis, is to use an indicator. And I'm not against indicators at all. They can be helpful in identifying important price levels, identifying the direction of a trend or whether something's overbought or oversold. But it's important that you understand how to do that yourself, and then you can use indicators to support what you already think, rather than blindly following an indicator that you don't really understand why it's telling you what it's telling you. Because Honestly, you're smarter than the indicator. You can identify, like today, what the headlines are and know that the indicator is probably going to give you a false buy signal if the market's dropping really hard all day, because the indicator will assume, hey, it's oversold, it should go back up. And you might know based on the headlines and your fundamental analysis that, hey, that indicator is probably going to be wrong more than it's right if it tells me to buy. And it'll probably be right almost every time if it tells me to sell. So you can preferentially decide which signals to trust and which ones not to trust, whereas the indicator doesn't know how to do that. Okay, so manual methods are important to be able to understand the technical analysis and pair that really with the fundamental news, your understanding of what's happening fundamentally in the markets in terms of the sentiment. And so let's do that now. And if you have any questions, if you want to give input, please do so at any time. So quickly, let's take a look at the main headlines. And then we'll come back to AvaTrade's website here. I'll show you a couple things before we get on the charts. So real quick, these are the headlines. It does not take long to understand the sentiment today. It's been like this since the morning. Very easy to identify. Here's the first headline. Dow sinks 2% as virus surge stifles recovery hopes. There's been a ton of fear today because the virus, the coronavirus, has been making a comeback in many areas around the world, the new strain, etc. And so there's a lot of fear hitting the markets. Over the past week, really, this has been edging in, and it really came to a high in terms of the effect that this fear is having just over the weekend and coming into the open of the market this week. And so the Dow's been down all day in the futures. So has the NASDAQ, the S&P 500, the DAX, the CAC, the Nikkei, etc. All the major indices, the equities have really been sinking today. And so we've seen that in the futures from early this morning. And then we saw when the U.S. market opened and the various markets around the world, when the European market opened earlier, Australian market, Asian market, they were all in the red, okay? And so it was easy to predict which way the movement would go today, which direction you might prefer with your technical analysis. So you're not trying to buy off a support level that then breaks and you wonder, well, why didn't it bounce? Why did the NASDAQ keep breaking support levels and all my buy positions were losing? Well, if you'd have looked at the headlines, you'd have known, maybe I prefer to sell when the entry price is where I want it, or when the technical analysis is where I want it. Rather sell from a resistance level rather than trying to buy off a support level in a plunging market. Okay, so here's another headline. Wall Street's new fear is that the economy has already peaked. Well, that's also not good. So here comes Wall Street losing its excitement about how well the market's been doing as the economies have come out of the COVID crisis and reopened. And Wall Street's new fear is maybe everything is kind of peaked. And so when something peaks, that tends to mean that investors will sell, right? And so that's what happened today. And it didn't help matters that there's fear about the virus also, and economies may be having to slow things down in terms of opening back up, or even reverse course as China has done some with reinstituting restrictive measures again. And so we look at more headlines. Oil slumped 6% amid OPEC plus deal to boost supply. Yes, they had a deal today to boost supply at the same time that the fear hit about the COVID crisis. So that was really bad timing for the OPEC plus nations, because they were hoping the price could hold up even with an increase in production so that they could sell more barrels, but still at a high price. But at the same time that they finally, and by the way, they've been bickering about this for the past week. On the day they finally come to a consensus that, okay, we'll increase production, boom, the largest drop in the market in a long time because of COVID fears. So that was not a good combination if you were wanting oil prices to stay up, to agree to an increase in production at the same time that all this fear hit about economies maybe having to shut down again. So the next headline says it perfectly. Perfect storm hits oil as OPEC deal collides with new COVID and growth worries. Okay, so that was really bad news if you were buying on oil. If you had short positions, tremendous. You made a killing today. And as we look at this, look at the snapshot here. The futures here were red since early this morning when the market opened. Red, red, red. We see the volatility index has been up double digits all day. And when I say double digits, I don't just mean 10%. I'm talking 15% increase in volatility, 20% increase, 25% increase. It's been up above 30% increase on the VIX volatility index. That's what we refer to as the fear index. Okay. And so when that is in green, anywhere near what it's been in green today, in terms of the fear index, the volatility index, and you see the futures are sharply in red, and you see the US dollar is strengthening against other currencies, as the US dollar many times is looked at as one of the safe haven currencies. So the USD tends to strengthen when fear hits the markets. This tells you you've got like a perfect trifecta here. This tells you that maybe this was a real move, and you could see it from this morning. The fact that you had a large drop in the futures market, you had a large increase in the fear index, and you had a significant increase in the strength of the US dollar, all since this morning. When all three of those are so strongly in those directions, the fear index is green, the dollar index is green, and the futures are sharply red, that's the sign of maybe a true market movement. And then at the same time, all the headlines supported that this was real fear. It wasn't some kind of false move. So we could see it early on today that was happening. And if you paid attention to these things, then your technical analysis could have worked wonders all day long. And I'll show you what I mean. I'll show you how in just a moment. Now, I did mention before we get on the live charts to do the technical analysis, obviously with the understanding of what the sentiment has been today, maybe we have a preferential direction that you might prefer to trade now. Before we get on the live charts, let's take a look at some things that could help you with your trading that AvaTrade offers. So real quick, trading platforms, if you go to AvaTrade Go under trading platforms with your mobile device, you can download our custom-made mobile app that works on the MT4 account, it works on the MT5 account, and it has some of those risk management features that we talked about. AvaProtect, it can protect against any and all losses for defined time periods, by the hour, by the day, for a small premium cost. So on a day like today, maybe you said, okay, when the US dollar is strengthening and fear hits the market, as long as it's not inflation fears, if it's fears about a slowing economy, the US dollar tends to strengthen and gold tends to drop. So gold, silver, and FX pairings, you can put AvaProtect on it. So you could have taken a sizable position on gold to short gold today and put 1 day protection on it. And if gold somehow went flying the wrong direction, $100 an ounce, no problem. You don't lose anything. You paid a premium for, 1 day protection or 2 days protection. And if gold drops like it did, $30, $40 an ounce in the right direction, you could make a huge profit, way bigger than what the premium cost might have been for the protection. So that's an example of how you can risk manage and build that into your trading strategy using AvaProtect. And that's available on AvaTrade Go. It's also available if you log in from our main website on our WebTrader platform. Okay. And you'll also find other useful features in our AvaTrade Go mobile app and also on our WebTrader. If you program the take profit and the stop loss with a price, it's going to calculate for you your risk to that stop loss price based on your trade size and the price you put. It'll calculate for you your potential profit as well. Before you ever buy or sell, you can set all of this up before you get into the trade. So you are in a lot stronger position to understand your risk and your potential profit and to manage your risk in a way that you're not just guessing with your trade size and not understanding how much you could win or you could lose. Okay, so very important that these features can help you out. It's good for experienced traders to save time. even if you know how to manually calculate your exposure and your potential profit, etc. And obviously it because it saves time, even if you're experienced, to have it do the calculations for you. And obviously for inexperienced traders, you can see the benefit that this would be to do those calculations for you, because you might not know how to do it. If I log in here, I'm on our WebTrader platform. And by the way, the WebTrader works with your mobile as well. You can use you can use a Macintosh, you can use a Windows-based PC, you can use your iPhone, your Samsung, etc. You can use any device to log into our WebTrader. It'll work on a computer as well as mobile. So you don't have to use the app to get those features either. You also have AvaProtect and all of those features that I showed you that were in the order window on our AvaTrade Go mobile app. Those are also available on the WebTrader here. Okay, so very cool features. Since we're talking about technical analysis, on the WebTrader in particular, if you go to this section, Trading Central, and go to Market Buzz, Analyst Views. Market Buzz gives you fundamental analysis organized for you. If you go to Analyst Views or Forex Featured Ideas, it gives you technical analysis done for you. Signals, you could call them. They're time-stamped as to when they came in. It's on cryptocurrencies. It's on FX pairings. You can switch what you're looking at, signals for popular FX, cryptocurrency, etc. Here's the signal showing you the breakout move. You know, these signals have been here all day, and look at the breakout move. And if you look at the chart, that's exactly what happened today. You know, the signals aren't always right, but there's a reasoning behind what this signal is telling you. And it tells you in this case, they're looking at the RSI, the relative strength index. They're telling you the price levels, what's expected with the movement, etc. And the lines are drawn for you as well, where the breakout move is expected to occur. Very cool feature to get your technical analysis done for you. Okay. Now, I would say also do your own technical analysis, which let's get on the MT4 platform and do it. This is crude oil. If you're wondering about this landslide that we're seeing here, this huge drop on the chart, those are 4-hour candles. So for the last 4, 8, 12 hours, oil has just been plunging. How could you have gotten in on this without even really understanding what the fundamental news was? Marija, the app does not have the Trading Central feature. Good question. The Trading Central function is on the WebTrader, not the AvaTrade Go mobile app. But you can use the WebTrader with your mobile device. So, and honestly, the WebTrader has all the same features as the app, and then more. So you might as well just log in from our main website and with your mobile and use that. If you want that Trading Central feature, it'll be there that way then. But the app is very nice as well. Don't get me wrong. I love our mobile app. As I said, it's an award-winning mobile app. Okay, so what we're looking at here is a landslide, a huge plunge in crude oil. We saw the fundamental news. We understand why. You could have been in on this all day. We knew hours and hours ago what was going on fundamentally. Those headlines that I showed you was obvious to see oil was going to drop today. You could have put a support level line here. Okay, so we see on the 4-hour candles from last week, support, support, support. If you're wondering what's a support level, it's a price level that every time an instrument drops to that price, it goes back up. Okay, and that's what was happening here last week and coming into this week. Support, price hits here, up, price hits here, up, price hits here, up. It tried again here and went up. Then if you drew that line and said, okay, if it breaks below this price, then it must have been something bad for oil. And we all knew OPEC was trying to come to a consensus as to whether they would increase production. So it was an easy call, even without knowing anything new, other than the fact that OPEC is still negotiating a potential production increase, to put a pending order below this support level, somewhere down here. So you could have said last week, okay, it's having trouble breaking below this price. So I could have put a sell stop pending order below the support level, maybe here, that if the price drops to that price level, then I must assume that OPEC agreed to increase production, right? Preemptively putting a trip line in the market, a pending order, that if it broke the support level, sell. And yes, I know I'm saying a sell stop pending order sells from a lower point. You say, aren't you supposed to wait and sell from a high point? And the answer is sometimes. In this case, no, because we knew OPEC might announce they're going to increase production. They indeed did, and that was part of the impetus to cause this support level to break. And once the support level broke, this is called a breakthrough candle. We see this 4-hour candle. Once it broke the support, look at the momentum. That's a classic breakthrough candle where the candle is so large and has so much momentum that the momentum, once the support level breaks, the momentum carries on with whatever news it was that caused the support level to break. That's the idea of a buy stop pending order or a sell stop pending order. Buying from a higher point or selling from a lower point is what those pending orders allow you to do. And the concept of that is you're willing to give up entry price to sell from a lower point in this case in order to confirm momentum, which is exactly what happened here. It broke the support. It would trigger your sell stop and down it went. And you still have a nice profit even though you sold from the lower point. Okay, that's the idea. All of us could have done that. I know many clients who did have pending orders below this support level, and as soon as it broke, boom, triggers your sell stop pending order to sell, and you're in on the momentum on the way down. Now their only problem is, when do I want to take profit? Do I want to close now? Maybe I already closed. Maybe I wait because it could drop further. That's up to you as a trader in terms of those scenarios of, how quickly do you want to take profit? Now, one way to do it would be to look at the technical analysis. And so we want to do that anyways, because if you didn't make money on the drop, maybe you still want to trade on crude oil because you see the volatility in the market today. So let's go to 1-day candles. And now we can see the price levels beyond where it's at now. So here's today's drop. And we look and we say, okay, where's the next support level where this might bounce from? Or the next support level where we could put a sell stop pending order below. And if it breaks that support level, maybe it's going to keep dropping. Okay. So another option would be, if the movement bounces back up, to wait and sell from a higher point. In this case, why would you sell from a higher point? If you're lucky enough to catch a high point in a downtrend, then it makes sense to sell in a dropping market from a high point. And we know the fundamental news. There's two reasons why oil, if it does happen to pull back up, there's two fundamental reasons why oil likely could pull back down. One being OPEC Plus decided to increase production, and the other being, boy, there's a lot of fear about the pandemic spreading again. So let's take a look and say, I see an important price level right here. Okay, this was an old resistance level on the 1-day candles. Resistance, resistance, and down. And now we follow that price level over, and we say, wow, we're well below that now. We already broke through that price level and broke below it. So that should act as resistance as long as the fundamental news doesn't change. This should act as resistance. Now, if the price comes back up, it should be resistance and allow it to bounce back down. So if we look at this resistance point here, we follow it over and we say this price point, 67.87 approximately, if the movement comes back up near there, that could be a spot you'd look to short on oil again, if you're lucky enough to get it to come back up in what you might believe to be a falling market. Okay, so let's go up and take a look at 1-hour candles, and we'll get rid of this line so we don't get confused. And we'll look at, this was the support level that it broke. Okay, down it went. It broke this support level, which we just drew. This was the old resistance level. Down it went. So now if crude oil comes up to this price level, this could be your first spot where you could short oil. Okay, so we could take a look and say, all right, if crude oil comes up to 67.7, then that's the first spot where you could get in on a short based on today's downtrend and the fear on the market and the OPEC decision, etc. So pending order, sell limit, that's selling from a higher point, and 67.7 could be a price that makes sense because that's the old resistance level from the one-day candles that we looked at. That's where the technical analysis comes in to identify what could be an opportunistic price point. And again, I keep saying if you think that oil should continue to push back down, then you might want to put a sell limit from a price up here in this range, because that's a resistance level on the one-day candles. Certainly don't sell just because I'm showing you the example. It would be because you understand the fundamental news situation and you like the technical analysis, this line being that resistance on the one-day candles. Okay, so 67.7, I might put my stop loss, let's say 50 cents up. So I could say 68.2, which would be 50 cents up on my stop loss. And my take profit could be back down near today's low. I wouldn't even have to break below today's low. I could take profit just before that, let's say at 66. The low, this wick went below 66. I could say I won't be greedy. If I'm right, I'll take profit at 66. And that would be $1.70 per barrel profit and risking only 50 cents. So I might say, you know what, I'll do a 2-to-1 risk to reward. So if it goes past my resistance a little bit, maybe I'll stay with it a little longer. So I'll go to 60, if I go to $68.70, I want to do maybe 85 cents to my stop loss to be half of that. So that would be 30 cents up plus another 55 would be 68.55. That's a 2-to-1 potential profit to risk. Okay, so now I'm looking at if this bounces up to the one-day candle resistance level that we saw, and we can't even see where that resistance was because we're on 1-hour candles, but it was way back here on the one-day candles. When the price came up to this level, it dropped sharply on the one-day candle. So if this comes up to that price level, we're getting in just before that resistance level. And if it drops $1.70, we take a nice profit, right? And if it breaks through and goes up, we lose half approximately. I've got it set up exactly half the distance from compared to the take profit that you'd lose if it breaks through and goes the wrong way. So you've got the fundamentals on your side, you've got the technical analysis on your side, and you've got the risk reward ratio on your side. Okay, it's nice to have all of those things on your side because then even 50% accuracy, you're not losing, right? And you should hopefully be right better than 50%. So you know, if you win one and lose one, you've made a profit. 50% makes a nice profit when you have double the potential profit compared to the loss. You could win 40% of the time, 35% of the time, and even still profit, right? With this type of setup. So what if it breaks the first resistance? Wouldn't it be nice to set up a second sell limit at the next resistance level, which was the first breakthrough level that we drew? This was the first one that broke today. And this price level here was the second support level, old resistance level that it broke through. So if we're wrong on the first one, if it comes up to the second one, you could have a second chance at selling in what seems to be a very strong fundamental reason why crude oil might have trouble breaking through major resistance levels. At some point, it may give in to the resistance and this big bearish move. So we've got one setup. You could have a backup right up here. Okay, so we're talking around 69.8. So you could set up a second one sell limit. And this one's up a couple dollars from the other one, 69.8. Sometimes these pullbacks before it returns in the direction that you expect. Sometimes the pullbacks break the first resistance level, and maybe it gets to the second. And 69.8. Okay, then we're looking at the stop loss. Again, we can put it 50 cents, 75 cents. It's up to you how far you want to put the stop loss above. In this case, maybe you put it a full dollar. So it would be 70.8. $1 risk, and your potential profit, if it's back down to the low it hit today, is much larger. So we could go, let's say 66.8. That's not even to the low that it hit today, 80 cents above, and you have a $3 to $1 potential profit to risk on that setup. Okay, and maybe because it's an even better price point, maybe I adjust how much I'm willing to risk on that trade. I go a little more aggressive. Now that's up to you, right? You want to look at your price. Somehow I deleted my entry price. Let me re-enter it. 69.8. There we are. Okay, so 2 pending orders in, both set up with the hope, right? I say hope that oil's able to bounce back up to give a better price point if you're looking to sell on crude oil now, with all the bearish fundamental news that there is on crude oil. Now, it could be that oil just isn't going to bounce back up there anytime soon. So those pending orders are not guaranteed to activate, right? But if you are bearish on oil right now, but you don't like selling from a low point because it really has plunged a lot, and maybe it's due to bounce back up some, we do see this wick forming and a green candle trying to form. So it is trying to bounce back up. So, if you don't like to sell from the ultra low point, then maybe this is the setup for you. If you indeed do feel like you don't want to buy on oil, but you also don't want to sell from the low point, maybe you wait and see if it'll bounce back up and give you a better entry point to sell from, if that's what you feel you should do. I entered a stop loss on both of the sell limits, Marisha. So you can see here we went 1/2 the distance on the first one, stop loss to potential profit. We went 1/3 the distance on the second one we just prepared to the stop loss compared to the potential profit, compared to the take profit. Okay, tremendous. John, you said, why didn't we talk about this the other day? We actually did talk about OPEC and the fact that they were debating increasing production. We talked about a high point that it would have been nice to get in that we looked at on the 1-week candles, that we had a pending order up there, that if it was going to reach that. We also talked about where the support level was and that you could prepare potential sell stops. So that idea was there for sure. So it's not just all about hindsight being 2020, but I understand your sentiment on that. Let's look at gold. So we talked about the fact that when the US dollar strengthens, gold tends to drop, which is what it did today. It pushed down quite a bit from the high it reached last week. Now, if we're looking at 4-hour candles, we can get a little better look at this, and we see some price levels on gold. We see a resistance level here. This is the 4-hour candle. So resistance, 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 right? And that resistance that we saw here last week corresponds with a breakthrough candle here that had a plunge in gold. So it took a major event at this point here for gold to break below that price, and it really plunged. Okay, now it worked its way back up and had last week resistance, 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 and then broke above, right? Now the fact that gold broke back below that price point I think is significant because it took a lot of energy a while back for gold to break below that price, and it really plunged after that. So now we've broken back below that price, and then it acted as confirmed resistance twice today. Resistance, back up, resistance. Okay, twice now that price has acted as resistance once breaking back below. So we could be looking at gold on, say, the 15-minute candles, saying here's that line of resistance that seems to be important. Old support, which we see here, breakthrough becomes resistance, resistance, and resistance again confirmed today on the 1 hour or 15-minute candles I'm looking at. So now we say, what's gold going to do? Well, US dollar has been strong with the fear. It's been weak with all the inflation worries. If the worry now is the economy has peaked and the virus is spreading, well, that kind of eliminates some of the inflation fears that have been driving gold up, right? So at least until the next stimulus comes out in the US, right? Which then could cause inflation fears again, and up could go gold likely. But in the current environment, we're looking at fear that is not related to inflation, but is related to things that go against inflation, like virus spreading, economies having to shut down, etc. So if it's fear about those things and the US dollar is strengthening as a result of that, then it could be an easy situation for you to say, you know what, I'm not even going to wait for gold to come up to the resistance. Maybe I just short gold right now, right? And if you're shorting gold, then you say, okay, I'm going to put my stop loss above this resistance level because that seems to be an important price level. It took a lot of momentum to get above, and it also took a lot of momentum to get below. And the last time when we were looking at the larger candles that it did break below, gold plunged, okay? And now we're looking at resistance being confirmed at that price level once again. So I could take a market move. I can put my take profit before today's low. Okay, it already dropped down below 1800 today. So I can go after about more than $10 per ounce profit on gold without having to break today's low. Just going with today's sentiment, with today's fear, with today's strengthening US dollar. Okay, just going with that on my side, basically with the wind at my back, to say, I hope this can come down near today's low. There's no guarantee, so I've got my stop loss just above the resistance, risking less than my potential profit. Okay, now could I also put a pending order up here? Absolutely. If gold comes up to a better price, I can still put my stop loss on the other side of the resistance, now risking even less, to enter at a better price, and perhaps then I can make an even better profit to risk setup here. So going with today's sentiment and looking at the technical analysis, I could put a pending order on gold, sell limit, that's selling from a higher price. You see, you're using the limit orders, the pending orders that are sell limit, buy limit, if the major move already occurred and you're hoping for a pullback. That's what in this case, sell limit is for. You're waiting for a pullback and then trying to go with the greater movement. Whereas the sell stop is the preemptive pending order that you put before the big movement occurred. Okay, two different strategies here. So we already know the momentum direction. We're trying to hope for a pullback to get in that direction from a better price point with a sell limit in this case. The market move is for the person who says, you know what, it might not even go back up. I want to get in the way it is now. If that's what you're thinking, that's what this simulated move was about, the market move. And then preparing a pending order, let's say from 1815, is a just in case type pending order, just in case it gives me a better price. And if I'm wanting to short the market, again, I have to qualify this. I'm not saying you should short the market, but if you think that's a good idea with this technical setup, the technical analysis, and with today's fundamental news, as we've looked at it, it seems that this could be something that you might be interested in. So then since my distance to my stop loss can be less distance, so for the same risk, I can have a larger trade and go after a larger potential profit because my pending order would get in at a better price point. I can have my stop loss less distance away. So therefore, I can have a larger trade and risk the same amount as my market move, which was a larger distance from where I had to put my stop loss. So take profit then could be down at the same area, 1796. And boy, would that be a nice setup if that comes up, and indeed if it dropped, because I'm not having to risk much at all to get in at that price. Again, it was 18.15. I managed to get rid of my at price again. Okay, there we are. Stop loss at then, let's say 18.20 or so. And there we are. So pending order in. I've got this stop loss a little higher than the other one, than the first one, but still a very short distance compared to my potential profit, which is like 3 or 4 times the distance. Okay, so there's an example of combining the technical analysis, looking at the breakthrough moves from large candles, like one-day candles, to identify where are the old price levels, support and resistance, what was the movement today, and then zeroing in on the technical analysis to go after a market move as well as pending order. Okay, I saw, Marija, I saw your question a ways after the time that you asked it. Okay. Yeah, sure, Ruben. Let's look at NZDUSD, and then I think we'll call it quits here. By the way, let's take a quick look at some of the indices. We see the NASDAQ, huge drop off. I mean, that is a large move. On the 4-hour candles, we can start to look for price points if you think you want to buy in this dropping market. It actually hit a support level just now. So we see this is an important price level that once it got above back here in late June, it stayed above on all of these 4-hour candles, support, again, support. Again, it got near in this area and bounced back up. Now it broke below it and now came back above. So it actually already tested this support and broke below it and then came back above that price level. So if we zoom in, say 15-minute candles, we see it certainly still looks like a strong downtrend. It broke below here's the red line, right? It broke below that support level and now it's just teased its way back above. So it looks like if you put a sell stop pending order down here, if this is your entry price on the NASDAQ, that then it's confirming a downtrend, breaking back below this support level that already broke below once. If it comes down and hits a price like this down here, that's confirming a further downtrend. So I think you have to be careful buying in such a strong downtrend, thinking that you're going to catch a low point and buy in this market. Could work, obviously, but it looks like it very easily could come down and confirm this downtrend continuing, and a pending sell stop down here could make sense with your stop loss then back above this old support level up here, risking just a little bit and looking at a take profit somewhere down further. Okay, I'm all for buying from low points, but you know, when the volatility index is up as much as it is, you probably want to be careful with that type of move. Let's take a look then at the requested currency pairing. NZDUSD was the request. Let's take a look at that. The US dollar strengthened so much, you may be able to find a price point you like if you're looking to go long on NZDUSD. The US dollar pulled down a number of currency pairings today. And let's see if I can find the NZDUSD, NZD Swiss franc. Maybe it's up higher. I think I might have dropped below it. Here, let's do the trick. If you type fast enough, it can take you to it. Here, I'll show you all a trick. If you go hide all, okay, that gets rid of everything except the ones that you have charts open for. Then right click and go to symbols, and we'll go to the Forex pairings, and then you can, in alphabetical order, look for the one that you want. Okay, so this may be considered a cross. NZD USD. No, not in the crosses. I apologize. Perhaps we're looking at exotic. You see they're by category here in terms of we've got more than one group of crosses. That's what threw me off here. We have so many instruments, sometimes it can be a little difficult to find the one you're looking for. Let's see if it's in the majors. There it is, Forex Majors 5, NZDUSD. Okay. And so I highlight it and click show. Now when I close it, there it is. Okay. Now we can drag it over and look at the chart. And so on the 4-hour candles, we see exactly what we expected to see before we even looked at the chart. The NZD has dropped to a support level. Look at that support level on the 4-hour candles. Support all the way back to June 18th and then up. It came down near, back up, came down, touched that support, back up on July 8th, tested it again on the 13th, right back up. And now here we are today. It hit that support and already bounced. Okay, so a purely technical trader on this NZD USD, it's an easy call. If you're going by only technical analysis, I'm buying. That's it. I bought on NZD USD in this simulation. Why? Because look at that support level. I can put my stop loss below that support level right there. No problem. I'm below every one of these wicks. So I'm completely below that support level. If it breaks the support, I'm out with a small risk. And my potential profit to the, just up to the high last week, I can take my profit before that. Look at the potential profit. It's 3 to 4 times what I'm risking. So a purely technical move, that's an easy buy on NZDUSD. Now, if we start looking at the fundamentals, we can say, well, not so fast. Why is this all the way down on top of a support level? It's because of all that fear that hit today. The USD strengthened a ton. Now, you might look at a bigger picture fundamental piece and say the US is working on more infrastructure stimulus now. There could be another stimulus package coming soon in the US, and if it comes, that could weaken the USD further as they print maybe another $1 trillion US dollars to hand out to help the economy. So fundamentally bigger picture, this could be a nice buy position on NZDUSD, and the technical analysis looks very nice. Nice support level that we're close to. So as long as you get your stop loss far enough below these wicks, this is more of a long-term move than in the buy position. And so you could slide that stop loss down maybe a little bit further if you look at 1-day candles and say, okay, maybe I slide this stop loss down here just to make sure I'm below all of these wicks. And by the way, this line is not a wick. Let's get rid of that. I'm below all of these wicks, and I still am risking like a third of what my potential profit would be here, getting in at a nice low point above a support level. And that's kind of a hedge to some of these other moves that we're thinking about as we're expecting the fear to continue and going in the opposite direction. It's nice to set up the opposite move. We're expecting maybe the USD to give ground back to something like the NZD here. Okay, very nice suggestion, Ruben. It's a nice chart to look at there, especially on the 4-hour and 1-day candles. Nice support level to potentially go long on here. Okay, Arthur, you're talking AUDUSD. You're asking what about shorting the Australian USD? If you're shorting the Australian USD, you're going with all that fear still. The Australian dollar tends to weaken with economic fear, and the US dollar tends to strengthen. And so if there's worries about the virus spreading and China having to, reinstitute restrictive measures on their economy, etc., that tends to weaken the Australian dollar anytime there's fear about China, because Australia sells a lot of their commodities to China, and if China is having fears again, that could weaken the Australian as the USD strengthens. So I can understand fundamentally why you might think to continue to short the Australian USD. In terms of the technicals, you'd have to look closer and see. I'm sure the Australian already gave a lot of ground to the USD today. So you might say, do I have an entry point I like to short the Australian USD? There's the chart. You see it's down a ton. We look at the 5-minute candles. It's on a small support level on the 5-minute candles. But if we go 4-hour candles, it plunged already. Okay, should you short it further? It certainly could keep dropping. 1-day candles, I don't see a support level on 1-day candles. 1-week candles, okay, I see a support level way down here on the 1-week candles. We're talking 0.70. It's like over 300 pips down to the next major support level on the Australian USD. Okay, so bigger picture look, I could short the Australian USD, put my stop loss above the 1-week candle resistance. Okay, here's the old resistance point on the 1-week candles right here. So I just dragged my stop loss above the 1-week candle resistance. I take my take profit just before the 1-week candle support, and I'm looking at better than 2-to-1 potential profit to risk. And because these are 1-week candles, this is a long-term move. These are 1-week candles. So it looks like a short distance to my stop loss and a reasonable distance to my take profit, but these are 1-week candles. So we're talking, this is a 300 pip move to take my profit. Maybe 100 pips to my stop loss. But boy, that's a nice long-term setup, technically and fundamentally. Nice suggestion, Arthur. Okay, great. I think this is a good spot to stop. We've got a lot of movement, I think, still to come this evening, and certainly through the week. With the level of fear that hit today, I don't think that disappears in one day. So you could be patient, wait for the price points you like, with maybe some bounce backs, and take advantage of all this fear that's on the market right now, because I think you'll see some continued large moves. Okay, good luck with your trading the rest of the evening and the rest of the week. Bye for now. Thank you for joining.